GameStop is plunging 57% right now on Tuesday as we speak. It's down 84% from its highs from just a few days ago. Chris Vermeulen, chief market strategist at thetechnicaltraders.com, is here to break down market action. If you're watching this on YouTube, comment down below whether or not you've been trading GME and whether or not you've sold your positions, at what point you've sold, and why. We like to learn directly from the audience. You're the best source of data. Chris, welcome back to the show. Tell us what's happening. Is it done? Are the diamond hands not holding on to it, to the GME anymore?
I think the GameStop move is pretty much done. I think the bubble's deflating, and everyone who chased price up and who's looking to hold their positions has now all flipped changed their tune, and they're all selling and they're trying to get out, and it's falling in a fast mode, which means there's panic, and they don't care what they get. They just want to get out of it. They don't care the price, and that's the typical type of price action we see when there's a bubble, a news-based bubble in a stock or commodity.
Did you see any indication of this sell-off prior to what we saw today and actually yesterday as well?
Yeah, well, typically when you see it, it's tough to almost see it on this chart because the price is so condensed. But when you get a price gap in the chart that moves up 148% from the closing price the previous day to the high the next day, pretty much almost where it opened, that is a pretty extreme move. And this chart doesn't actually fully show it, but GameStop actually went all the way up to 520 in pre-market at one point, or 518. So when you get these giant gaps on the chart, followed by huge volume, and everyone is interested in it, it's in the media, and people who don't normally trade this stuff, who aren't even traders, want to trade it, you've got to like look back and go, wow, this is like a total mania, and at any time it's going to burst, usually within a few days, and that's exactly what we've seen.
Yeah, well, it is interesting because even before it hit the near $400 level, you would assume that even at the $240 or $200 level, you would assume that this is already overstretched, but it just kept going up. So my argument to what you just said, Chris, is that at the $400 level, if you're just looking at what was going on Reddit and Wall Street Bets, people were still holding the line. People were still pushing it up. So it already beat resistance at 200, at 300. Why couldn't it have gone further up?
It could have. I was actually hoping it was going to hit about 750 or 1,000. And at that point, I was actually going to be excited to short it because 1,000's are a solid whole number. I think a lot of people were kind of thinking the same thing, which is probably why I never made it. But when you have these massive movements of just crowd psychology piling in, you never really know how far something is going to go. And this is where you really need to understand risk management, position management, because it's really easy to get in hot water trading these, because if it gaps down 48% on a day or gaps higher 150% against you, that's going to do a lot of damage, right? So these are very dangerous stocks to be playing. Really, that's the grand scheme of things here.
So Chris, what's your reaction to today's price action? Would you be jumping in at these levels, or are you going to stay on the sidelines?
Yeah, I wouldn't touch it. It's a full-on gamble here. I think the excitement, the move's more or less done. It's going to be very random. I'm not a fan of trading things that jump around randomly. It's hard to make money, and it's just a high-risk trade. So I steer clear of it. I haven't traded it. I'd like to, but it didn't hit the levels that I was looking for. So at this point, I would just let it fizzle out, move on. Don't let the excitement like suck you into trade it. This is how the market pulls money out of your pockets, is it gets your attention with something like this, and then it'll end up taking it if you're not a very sharp trader.
Yeah. And there are no fundamentals to back up this trade, do you think? Do you like this company?
I don't really know a lot about its fundamentals, to be honest. I'm a pure technical analyst, so I don't know where that stands.
The ideology behind the whole short squeeze is that, look, we as the little retail traders, we've got to hold the line. We've got to stick it up to the Wall Street firms. We got to show the hedge funds who's boss. And so a lot of people were kind of just long with that kind of. No one really cared about the fundamentals, the technicals. They were going in with the pure ideology. And so, it was interesting for me to observe how far that could have taken the stock. Did it beat your expectations?
It did meet my expectations. I remember watching it at 200 or 150 one night or 250. I watched it in overnight trading. It ran up 150% in the evening. And then from midnight to like 4 a.m, the same session, more or less, overnight trading, it fell like 50%. And then it rallied 97% just before the opening bell. All this happened while everyone was, well, most people were sleeping. It was amazing to watch. But it's amazing also to watch the small people not take advantage, but give a taste of manipulation to some of the bigger players.
Yeah.
You know, we all get screwed on a lot of trades from big funds moving money in and out with trading systems and things like that. So to watch the herd mentality pile in and just, you know, give Wall Street a taste of what it's like to be manipulated for once is kind of I think that's what people are really enjoying about it.
Right. Now, if you're just looking at the technicals of the chart again, let's just take a look at the chart. Do you think it's hitting some sort of bottom right now?
It could be. Let's take a look at the 30-minute chart. So it's definitely coming into some type of support zone. It's such a huge movement. It's hard to see much on the chart, but it's right into this first initial wave where we saw initial pop and a big run up and then a sell off. So it's definitely coming into support. It's also at this green line here, which is a 20-day moving average. Now this chart is a 30-minute chart only. So we're seeing the last 5-10 trading sessions chopping around, and the 20 days is usually a very strong support level, coupled with the fact that it's at its first level where it popped up and then kind of gapped and pulled back. So definitely a support zone, but I'm not a fan of this type of price action in terms of trying to get into this because you could have a very big gap going forward. So it's just a high risk trade, right?
I'm just wondering if you were to observe this, from a completely neutral perspective. Let's say, I like to use this analogy. Let's say if you're an alien, you didn't read anything on the internet, you had nothing, and you're just looking at this chart. I give you this chart with no name, no nothing, no background information, and you're just looking at the price levels right now. Would you be thinking to yourself, now's probably a good time to get in based on what you just said?
Yeah, it is. When you look at any type of bubble or stock market top, it usually rallies up and then has some significant collapse. And then it has this kind of, it's like a false belief, like people buying into it. And then eventually it falls and goes much lower later. So I would not be surprised that there's a lot of bottom hunters fishing in here going, wow, I can finally buy this thing at 100. It was $500 just like 2.5 days ago.
Right.
So I could see a technical bounce, an oversold bounce, but I just don't see legs behind it. I think it'll fade out and fizzle out afterwards.
Yeah. Even at $100, it's still up a lot from can you go back to like mid-January? Where was it at before this whole thing started? Like $14?
If we just get rid of that spike, you can see where it traded back in March. It was at $2.60.
Okay, forget March, Chris. Let's just go back 3 weeks.
Oh yeah, well, if we go back 3 weeks, it was $22.
Okay, so even at $100, if you got in 3 weeks ago, you're still up. Assuming you held on to those diamond hands and you didn't do nothing yet.
Yeah, for sure. But the majority of people, when you look at this price action, let's try and you can see it was very light volume. The majority of people piled in when it went from 20 to 38. So you're still in the money for sure, but the majority of people piled in at these highs, right? That's where all the volume is. So most people who've jumped in to try and take advantage of this are now deeply underwater, but the early birds are still in the profit and they're still laughing right now.
When you're looking at volume, do you as a trader, do you have indication as to whether or not the volume is long or short?
No, you don't really know that. No, sorry.
Yeah. Okay. Now let's take a look at AMC. Are we seeing similar price movements in the AMC stock?
Yeah, it's the exact same type of thing where you get this huge, like look at the gap on this. I mean, these charts are almost hard to look at just because they dwarf the previous price action. But AMC jumped 291% in one trading session from the close one day to the open the next day. I mean, all you can say is, man, there's going to be people taking profits. Whoever was in is going to be locking in gains. That's what happened. But then you get the rest of the crowd piling in, kind of pushing the price up and down. So it's the exact same type of scenario. You can see it is down, 61%. It was the low this morning, down almost 70%. So it's a wild ride, exact same scenario. It's just everyone piling in. See, this time it was a bigger gap right off the hop because a lot of people learned their lesson on GameStop. they all go, wow, the next one that's like listed on the Reddit, I mean, I'm piling into it. And so the market makers saw that. And of course, they gapped the price higher in pre-market to try and wait out the buyers and the sellers. And so all the opportunity was gone at the opening bell the next day, and everyone paid the ultimate high price and got absolutely slaughtered. This is what Wall Street does the best. If they see huge demand, they're going to make sure you pay a premium, and they're going to be selling any shares or balance that they have, and it's going to completely collapse. And you're the one holding the bag at the top. And now we're seeing it kind of overlay, now we're going to see more of these stocks happen, but these big gaps are probably going to be the major issue. You'd be better to actually short these massive gaps, but that is a dangerous bet on its own too.
Yeah, and to those viewers watching right now, if you sold either of those stocks at any point in the last 48 hours, let us know in the comments down below why and at what point you exited out of those trades. We'd like to know. You're the first source of information. The data points come from the viewers. Now, let's talk about silver. I wonder if there was a sector rotation out of GME into silver in the last 48 hours.
So we definitely saw a big push. The Reddit group started to talk about silver, 4 days ago. Right over here, we saw a big push in silver, and then it started to gap up and it started to run. Definitely, I think money is now, I mean, I've even seen it on posts and from emails as well. People are like, how do we get in that Reddit group? How do we get involved in this? And you got to be real cautious, just because it's like gambling, this type of trading. But we're definitely seeing the market move. Now, this time, Reddit group was talking about getting into silver to run the shorts out of the market. Silver's a little bit different than a stock. It's a commodity. There's going to be a massive lag and delay in trying to really run the shorts out of the market. I think if people were to just keep buying silver, stockpiling silver, become silver stackers, and hold on to the silver and keep doing this month after month after month, I think it could drive the price up and actually truly run the shorts. But because this is paper money, this is like futures, it's not real silver. I mean, it's going to be a little tougher to run those shorts out of the market. But we're definitely saw the big pop, and now we're seeing it fizzle right back out, where people just go for the quick gain and then they cash out. So that move is kind of done at this point too.
Chris, there's a debate going on the internet as to whether or not the Wall Street bettors were even involved in the silver trade. Yes, they started talking about it, but if you look at the forum, most people are now denying allegations or denying the suspicion that they were involved. And so I had a discussion with the guest about this yesterday. The Wall Street bettors don't seem, his opinion was that it's not all the Wall Street bettors, it's the exact same crowd going into GME that went into silver. What do you think?
I definitely know a good chunk of them moved into silver, but it's definitely not the same herd. I think a stock trader and a futures trader, somebody trading silver, they're a bit different group of people. And the futures traders, there's a lot fewer of them compared to people who can trade stocks. So it definitely, I know a lot of people, even I was thinking, I'm like, whoa, this could be a really good play. If this really goes parabolic, silver could like go to 80 or 100, like in a heartbeat. But I don't think it had the same kind of oomph behind it, because it's not an equity. It's not quite as easy to just do what they did in GameStop and AMC, in my opinion.
Right. Okay. Yeah. Silver miners also took a hit a bit today. Now I wonder, Chris, you want to stay in the sidelines for some of these more volatile securities. What are you looking at right now? What are the trades you're looking forward to making?
I mean, some of the trades we're looking at in this market, precious metals I've kind of ruled out. First of all, they've been in a downtrend for a while. If we just look at the silver sector, the silver miners, they had this huge gap to the upside and then came back down. It's really been trading sideways, trying to find momentum. If you look at the gold sector or the gold stocks, they've been trending down. So precious metals aren't top of the list right now. Ones that are actually gaining traction are like the MJ, the Harvest Marijuana ETF. We're looking at electrical vehicles still, clean energy. We're starting to see the biotech. The biotech sector could really start to pick up speed and expand. We're seeing a lot of money flow into small cap stocks and into tech-heavy, tech-related small caps. So that's where the money's going. It actually feels a lot like what happened last March, April, where everyone started to pile into these the tech and the small caps and really take things off. So we're kind of back into this sweet spot where some of the fastest moving stocks are the ones that are getting bought up here. Going across the board. So I think we're going to have another big tech run. The NASDAQ's up really nice. I think you just need to be kind of tech weighted. That's kind of the area right now to be in.
Chris, I want to thank you so much for giving us your price update. I know you're a busy trader. Crazy, crazy times for the markets. Thanks for coming in.
Yeah, thanks for having me, David. Anytime.
And thanks for watching Kitco News. Stay tuned for more updates.